Hey guys, hope you're having an amazing day. It has been a very long road for the approval of the spot Bitcoin ETF in the US. This thing actually began back in 2013, if you guys didn't know that. When, an entity affiliated with the Winklevoss twins sent their first application for such financial product to the SEC. And while that application was actually rejected at first, Bitcoin ETFs based on future products were eventually approved by the SEC starting back in 2021. Up until now, a large number of spot-based Bitcoin ETF applications have been rejected on the grounds that Bitcoin's unregulated nature creates way too much risk for investors, but that is no longer the case. 11 whole, Bitcoin ETFs were approved today by the SEC. And those were BlackRock's iShares Bitcoin Trust, the ones from ARK, Wisdom Tree, Invesco Galaxy Bitcoin, Bitwise Bitcoin, Van Eyck, Franklin Bitcoin, Fidelity, Valkyrie, Grayscale, and Hashdex. And I do expect many more to come in the future as well. So it's been a very big day for crypto enthusiasts. The forums, whether it's on Reddit, Twitter, places where investors congregate to talk about crypto, they have been absolutely ecstatic today. And we have a lot to talk about regarding this in terms of what this means for you guys, what this means for crypto in general, for the long-term future, right? Because so far it's been a very, very good year, a very good couple of months actually for crypto. But what does this mean for the very long term? And that's what this video is going to be talking about. So before we begin, if you haven't already, come and join my Discord. As I said before, we have so much content in there. I showed you guys even during my last stream because I think someone asked me about educational material regarding options, because there's a lot of people interested in day trading options given their rising popularity these past couple of years, but a lot of people are scared. Don't be scared. We have so much content for free available to you right now on my Discord, so go on and join it. We do day trading in there. We have a whole bunch of stuff for you guys available. You guys don't have to pay a penny to have access to that, so just click the link in the pinned comment down below or the video description and come in and join us. With that said, let's get started. I've been following this subject for a little while, and I do want to give a credit to the sources that I've been using, such as Investopedia, such as Bitcoin Magazine, CoinDesk, Market Insider, and actually Motley Fool, as well as Seeking Alpha, even though that website is just open for everyone to give up their analysis. But yeah, I do want to give a shout out to them, to the websites, because a lot of what we're about to discuss today is actually sourced from that, so credit where it's due. So as I said, today was a big home run for crypto enthusiasts. On the forums, I have seen people asking why crypto did not rally immediately after the news came out, and the reason for that is because it has actually been rallying all this time. These types of things are always priced in, right? So when the actual news come out, it's not rare for the price of these assets to actually fall as many investors decide to take profits. There's a famous phrase that goes around in trading forums that says, you buy the rumor and you sell the news. And that's pretty much what happened today. Where Bitcoin goes from here will be very interesting, but given that now stock market investors and traders have the ability to invest in the asset, I actually do expect significant growth of adopters and enthusiasts. So let's break this down a little bit. The Bitcoin exchange traded fund got approved. For those that don't know what an ETF is, it's a financial product that allows investors to gain exposure to an asset without having to directly own it. Some ETFs have holdings of different stocks, which allow the investors the ability to have exposure to a wide array of securities and keep a safe level of diversification. The Bitcoin ETF in particular is a little bit different, given that it will provide investors with a convenient way to invest in Bitcoin through traditional brokerage accounts. What I think is going to happen is we're actually going to start seeing ETFs come out in the future with different levels of crypto holdings. As far as research goes, the Bitcoin ETF will function similarly to other ETFs in that it would be regulated by the SEC and be subject to a strict reporting requirement list. This would provide investors with a level of transparency and oversight that is often lacking in the cryptocurrency market. Additionally, a Bitcoin ETF would bring institutional grade custody solutions, reducing the risk of theft and loss of Bitcoin. When we consider the role of an ETF that holds Bitcoin in the overall market, it becomes a tricky question. The introduction of a Bitcoin ETF would likely lead to increased market liquidity. As more investors enter the market through an ETF, the overall trading volume of Bitcoin would likely increase. This increased liquidity could actually help stabilize the price of Bitcoin and reduce volatility, making it even more attractive as an investment option for both retail and institutional investors. Additionally, the approval of a Bitcoin ETF could have positive implications for the broader cryptocurrency market. It would signal a greater acceptance and recognition of Bitcoin by regulatory authorities, potentially leading to increased adoption and mainstream integration of Bitcoin. That goes into what I was saying earlier. Bitcoin is by far the most stable and credible cryptocurrency out there, and its introduction into the stock market will both favor it and other cryptocurrencies as well, such as, Ethereum, Tether, Ripple, Cardano, and many, many others. The biggest takeaway from this video, if there's anything I want you guys to remember and take home from all that we have talked about today so far, is that this change will, provide investors with a regulated and convenient way to gain exposure to Bitcoin, potentially driving increased demand and liquidity. Additionally, it will also it would also attract institutional investors, bringing stability and validation into the market. However, there are still some risks and challenges ahead, such as market volatility and regulatory uncertainties, which must be carefully considered by every potential investor and trader out there. Time will only tell how this Bitcoin ETF approval unfolds, but the potential outcome warrants very close attention from both investors and regulators alike. Now that we've talked about what has happened with a clear understanding on what things are, we can sort of make sense of the past, which will actually help us foreshadow what lies ahead. So let's actually start talking about how Bitcoin has rallied over 60% since early October on obviously the expectations that the SEC was going to approve one or more spot ETF applications. This is actually the reason why Bitcoin did not pop 60% today. As I've said earlier, these things are priced in ahead of time. There's many analysts out there that are actually forecasting a sell the news type of pullback in the coming days as investors lock in those tasty profits as news are confirmed. These analysts are pointing to the whole thing with the CME Bitcoin futures which came out back in December 2017. On those occasions, we actually saw Bitcoin rally in anticipation, only for it to crash in the weeks after the event. CryptoQuant hinted at a potential dip in Bitcoin's value to around $32,000. This prediction is based on the current level of unrealized profits in the market, which has historically been an indicator of an impending price correction. A price correction in the crypto market is typically viewed as a 10% decrease. Despite this, Bitcoin saw a surge of 160% last year and has already experienced a nearly 4% increase this month alone. CryptoQuant is not alone in predicting a decline, by the way. QCP Capital, a Singapore-based crypto trading firm, said on Telegraph last month that initial demand for the ETF could be lower than expected, setting a stage for a classic sell the news type of scenario. Investors are concerned about a replay of what followed, with the launches of the CME futures and Pro shares BITO back in the day. With the rallies having been followed up with a huge correction. What I am thinking, though, is that, with a bullish market and an improving economy, and given both how popular crypto has been and how it's managed to grow over time and become a real asset that you can actually use for normal day transactions as more people adopt it, we will actually start seeing an increase as time goes by. Like I said earlier, its introduction to brokerage will allow people to own it and help stabilize volatility, which will make it even more attractive to other investors. So from where we go from here is honestly an open-ended question in the short term, but long term though, I actually do see really good things ahead for crypto. I myself have never considered I have never considered myself to be a fan of crypto, but I think it's honestly time for me to start changing my ways, being more open to it and embracing it, and reading about it, because honestly this only feels like the beginning of something big. And it's honestly time for people like me that have just been very sort of dismissive about crypto in general, for me to just pull back and just say, what, this is a thing, this is going to be a thing in the future, and I need to start paying attention to what it could mean as far as the opportunities ahead for us. So yeah, let me know what you guys think down in the comments section. If you guys haven't already, join the Discord, and I hope to see you guys in the next one. Thank you so much for watching my video. Big shout out to all 300 people that showed up on my live stream yesterday. Yeah, was it yesterday? Yeah, it was yesterday. So yeah, no, I am gonna be streaming more in the future. It's just I've been sick like crazy this past couple of weeks, and it's been very hard for me to even talk. Today I've been feeling a lot better, which is why I hopped in. I did have a couple of videos that I did want to make, but obviously given my health circumstances I was not able to do that. So I decided to live stream and then just make this video regarding crypto, because it's honestly really interesting, and I'll be following this whole development as time goes by. My next video is probably going to be more economic based, and it's going to be concentrated around both the US economy and the Chinese one. So stay tuned for that. Thank you all so much for tuning in. I hope to see you guys in the next one. Peace.
Passive investing is actually rooted in the theory that markets are efficient, and that markets are efficient because of active managers setting the prices of securities. Firms like Citadel. That markets are efficient because of active managers setting the prices of securities. Firms like Citadel, firms like Fidelity, firms like Viking Global, Capital Research. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. Trying to drive the value of companies towards where we think they should be valued. And passive investing, in a sense, enjoys the market efficiency that we create in our work each and every day.
Thinks that there was collusion, that the big guys, all of you guys, were figuring out how to do this and ultimately come out ahead, as you always do. But did you talk to them about restricting or doing anything to prevent people from buying, not selling, but buying in GameStop? Anybody in your organization?
Let me be perfectly clear. Absolutely not.
So if we depose everyone in your organization, we will find that.
That is correct.
Okay, thank you.
Ken, part of what you attribute this lack of competitiveness to is functional. It's a problem in the education system, and part of it is cultural. This lack of drive for earned accomplishment. Is it possible that there's another factor as well? That if more Americans believed that the odds of success weren't tilted so far in favor of those with money, power, influence, and historic advantages, they'd be more competitive? In other words, inequality is part of the problem?
There is no doubt that we have narrowed the window of opportunity in our country by our broken K through 12 educational system. There's no doubt. And it traces back to the rise of the teachers' unions in the 1960s, where we put the interests of our teachers as professionals in front of those of our children who are the future of our country. And to be clear, I was at my high school class reunion a few weeks ago, largely to pay tribute to one of my teachers who was so important in my life, who was able to attend us and celebrate his birthday with us. We all have those teachers in our lives who left such a mark on who we are. But yet, I watched Mayor Emanuel just absolutely get attacked by the teachers union for trying to do the basic necessity of having a longer school year and longer school day. Chicago is one of the shortest school years in the country. We have less hours of instructional opportunity for our kids than almost any other major city. And our mayor went to bat to change that and got batted over the head by the teachers union. And it was a disgrace. He worked so hard to improve our public schools in Chicago, and to see that undermined continually by the unions has been heartbreaking. And now what's even more remarkable is the idea of us unionizing our principals. We're going to take away the people who are most accountable. And I got to tell you, I hosted a dinner for our principals a few years ago just to thank them for a number of our higher achieving principals. Just dinner to thank them for a job well done. And when you hear the struggles they face in dealing with the teachers union, and you hear how hard families work to overcome these obstacles, one teacher spoke about, or one principal spoke about, how they, by union contract, cannot teach a certain math class in their school with their staff. And the parents have a carpool to come pick up children to take them from one school to another school for an hour of instruction and to bring them back. I mean, this is just an absurdity.
What's the overall thinking on these retail investors, though? Are they back? Was it a black swan? Is it something?
You mean the whole sort of meme stock phenomenon that got Gabe in trouble in GameStop last year?
Yeah.
It's probably a moment in time. Replay the history. You've got this enormous stimulus program from the federal government, sending checks to tens of millions of American households. And a fair number of those households did not need the cash. They put it into the stock market. And people were looking for connection. They were looking for something to be involved in. You had the rise of the Wall Street bets and the whole Reddit phenomena. And I don't want to say our stock market devolved into entertainment, but there was certainly an entertainment dimension that came into play with money that was in some sense just dropped out of the skies into people's wallets. And they took a run at the stock market and GameStop and AMC and dozens of other meme stocks. I like to think it was a moment in time. I like to think that's the case. It's not how capital formation works best. And frankly, a lot of it came from a place that I don't think it was very healthy, which is like, let's try to take a firm like Melvin and put them into bankruptcy. Like, great. So you basically help wipe out the pension plans of teachers. You feel good about that? It's like Gabe's money that you're taking down. You're taking down the money of a pension plan that belongs to a teacher. So I don't think it wasn't a very good moment in American capital markets history, but I think you have to replay history and go, where were we as a country? And people were locked up in their basements, kind of losing their minds.
So it's a COVID phenomenon.